on YouTube and start. Today works. So yeah. Okay, so we live on YouTube. So I like Pierre, I like your ears. Very good. Good morning, everyone, and welcome to this Christmas edition of the Crypto Hour. So it's the last Crypto Hour of the year. So we will do a let's have a look back at the previous year and what change it has brought in general in the economy and in the crypto world, and then what we got to look forward to for 2024. Okay, because there's quite a few kind of like seismic shifts that are happening in general that we need to be aware of. Let me start very quickly having a look at the economic calendar as usual. Nothing much going on this week, but things that have kind of being confirmed. I mean, we still have figures that keep coming in about monetary policy at the moment in most countries. They're deciding to keep interest rates where they are, including Japan. They had very lax monetary policy now for as long as it can be remembered. So there was kind of like an expectation almost of a shift, and to see kind of interest rates starting to come up. But recently, even inflation figures in Japan are coming down below average. So there's one country that's trying to push inflation up rather than down. They're still not succeeding. So inflation is coming down in Japan as well, as we had figures last week in the US, Europe, UK, Switzerland, and more recently, like today and yesterday, we had the GDP figures confirmation. On Wednesday there was like a big surprise in the UK. When inflation figures came quite a lot below expectations. So the UK has got higher inflation than anywhere else in the world, pretty much. They're now kind of back below 4% and around 5% for the core inflation, which is kind of a good sign in a way for the UK economy, so that there can be expectation for all of you that are in the UK and they got a mortgage. So expectations that next year mortgage rates are going to come down. So it's good news from that point of view. It's not good news obviously for the pound sterling, because the value of the currency depends on the interest rates, and with the expectation of rates going down, obviously there is a readjustment of exchange rates. But yesterday we had confirmation on the GDP figures in the US, again quite strong quarter on quarter, but below expectations. And in the UK also this morning, we have confirmation that we had kind of 1 quarter of negative growth. Okay, so we could be heading into a recession if we carry on having negative growth for the next quarter as well. So as we were saying before, the UK probably is one of the places they are weakest from the point of view of the economic cycle. So if there is somewhere where this can be felt first, it would be probably the UK. Okay, so what are we seeing? Kind of like what we see in the last year. We were in an environment where we had interest rates. Let me just change a couple of things so I can show you in charts, so it can be easier to understand. Okay, so these are the interest rates on the 10-year bond. Okay, so the yields they're available. So the yields are going up. As the US started increasing interest rates in 2022. You can see we're at just about 1% at the end of 2021, and very quickly in 2022 they went up to around the peak was around 5%, 5% a couple of months ago. since then, we've seen, the market, although the interest rates haven't changed in the US, we can see the market is pricing in lower interest rates. Okay, so just confirming that the peak has been reached, and the expectation. So this is just based on expectation. Okay, not anything, any initiatives that have been taken by the federal bank in the US, but simply expectations that rates will be lower next year. And we've had last week confirmation that from Jerome Powell, pretty much has said in words that they're now talking about when to lower interest rates. So this is, we see here a big drop again in the yield from what has started. This was just speculation. Okay, so when we got to October and we're seeing that the Fed wasn't raising interest rates, were pausing, the market said, okay, we have now reached the top, and we're starting to talk about when we think the interest rates are going to come down. Okay, so the market had agreed pretty much before last week that was going to happen around May. Okay, this start happening around May, and now it's the expectation has shifted from May to March, with a significant number of people that are now starting to think that it could even happen in January. Okay, so obviously, the shift in attitude from the Fed doesn't just come because they're happy all of a sudden and they want everybody to go out and spend money. It's simply because they have seen the signs in the economy, the stress in the economy that the restrictive policy is causing. And the thing is that it's not just the interest rates that they set, but it's also the difference between the interest rate and the inflation. Okay, so the spread between the level of interest rates and inflation is what is called like the real cost of that weighs on the economy, is that difference. Okay, and even if the interest rates have stayed the same, the fact that the inflation has come down, it means that cost, the real cost, has gone up quite a lot. So they want to keep that difference to around 1.5%. At the moment is about 3%. Okay, so that's the reason why we're seeing this this change. So in a place, in an environment where we see the cost, so this is kind of there are two things to consider here. Okay, as a business, as a consumer, this determines how much the 10-year and 20-year yield determines what you will pay for for loans, whether they are mortgages or personal loans or whatever. That determines the cost of your of your borrowing. But at the same time, this is the return that savers get for for investing in investment products, like bonds, etc., etc. So not only it kind of like it's a boost to economic activity because then investments is cheaper, but also it tells you that people cannot get these high rates anymore. Okay, so as the interest rates come down, savers will be looking to find different places where they can put their money that can still provide a good rate of return. Okay, so that it's in a way the drop in yield is combined with let's say an increased attitude towards risk, because obviously people are chasing the higher returns. Okay, when the very high returns available risk-free, happy to take it, but as these things come down, it's normal to start looking around and see where we can achieve better returns somewhere else. So what are the the drivers, or the kind of the positioning, the asset classes that are interesting in this time of falling interest rates? One is kind of long-term bonds. Okay, as we've been talking about this for a while, kind of like 10, 20 and longer duration interest rate bonds, like 20 years, 30 years, and so on, because you can get now. At the moment, this is the rate that you can get in the market for a 10-year. Okay, so about 3.9% is about 4.2 for a 20-year bond. Okay, so as you fix that rate for and buying bonds, and the interest rates come down, the price of the bonds goes up. So expecting, just imagine, at the moment you can get 3.9% with a 10-year bond. Okay, in a year time, as the interest rates are starting to be cut, you won't be able to get that. Maybe it will be like, I don't know, 3.3, 3.4, whatever it is. But so that means that a product that pays 3.9 goes up in value. Okay, because you can get that sort of interest somewhere else. Okay, so in a declining interest rate environment, long-term bonds are kind of a good store of value because they pay decent interest rates, but at the same time the capital appreciation is also likely. On another asset class that will benefit from this, it's property, and we've seen I think it was yesterday. Let's have a look. It was mortgage rates, maybe the other one. The mortgage rate as well, where in the US, the 15-year and 30-year mortgage, they've gone down from 6.4 to 6% and 7% to 6.6. So this is already started to be felt in the mortgage market. The same in the UK now for the last 2 or 3 months. Mortgage rate has started getting cheaper, and etc. etc. And you see, this is the rates that the savers can lock in. These are like inflation protected. So although it's like 2.5%, this is 2.5% above inflation. Okay, so that's gone down now from 2.5 to 1.7. So this makes you realize, as a saver, that's a big difference. Okay, that's a big difference. So as these things come down, obviously it's encourages to look somewhere else. Now, obviously, one of the places where you could look to could be the stock market. So this is the S&P 500. The S&P 500 at the moment is, sorry, let me just get rid of drawings. The S&P 500, which is at all-time high. Okay, so we hit the all-time high on Wednesday. Okay, so there's a couple of considerations here. First of all, buying at the highest point in price of anything, it's obviously dangerous, because obviously we're on uncharted territory. Yes, things could potentially go up, but there is a long way to come down as well if there is any trouble in paradise. Okay, and part of the trouble is that the earnings haven't kind of kept pace with all this market excitement. Okay, although we have been making new highs in the in all the indexes that you can consider, most of these or this level is down to very few stocks. So very few technology stocks that have represented more than 60% of the increase in value of the all indexes. So we think that everything is perfect. Well, it isn't. So it's as an investment thing, an investment class. At the moment, stocks and shares are very expensive. Let's just put it that way. Okay, so yes, there has been. You always see a lot of marketing for stocks and shares because investment houses and brokerages only make money really when the market goes up. Nobody wants to buy funds, and investment shares when the share prices are going down. So there is a lot of push to to create FOMO, so that people invest in these things. But looking forward, I would say especially in the US, the property market has been pretty much flatlining for the past 3 years, with very reduced growth, often negative growth or just really stagnant. So at the moment now, with interest rates coming down and with increased activity in the property market, could be a good idea to put some of your to include in your portfolio some REITs, real estate investment trust, because you can buy now so that's the difference. It's in investing is not so much what you buy, but when you buy. So timing the markets will give you really good returns, because you are buying generally asset classes. Try to buy asset classes when they're cheap, not when they're expensive. And this is exactly what institutions do. If you see the charts for bonds, they started buying when in October, something that's been tanking for 2 years. So why would anybody put a lot of money towards something that's been declining regularly in price for the last 2 years? Is because they has reached their target price, and they know that from them, they're looking to make a lot of money. The same in property right now. In REITs, you can lock in because they have to pay most of their income in dividends. You can lock in returns of 10 to 20%. But not only that, so that's a regular income that you receive by dividends. But at the same time, if the market picks up, the property market picks up, you are looking at considerable potential of capital appreciation too. So if you can get a double bubble in a way, so a good return and the potential of capital appreciation, that's kind of in a way the best of both worlds. So in terms of generally speaking, we have seen in interest rates, we have reached the peak, as you can see. This is where they started. Prices have started slightly declining. We have actually reached a peak at the end of towards the end of October. Let's have a look at 2023. Okay, so we've gone up from about 3% to about 5%, and now we started traveling back. So we are now below 4% in 10-year interest rates, and the expectations are that we get to the end of next year, that will be back at around the 3% mark. Okay, so obviously this is a shift that takes eyes away from the safety of the dollar in a way, and shift attention to other asset classes. It also makes, for those of you that are interested in precious metals, for example, it makes precious metals more interesting, because obviously gold, silver, platinum, they don't pay a dividend, but in a declining interest rate environment, there's less of a premium to be paid in a way to all gold, because if you have gold at the beginning of the year, and you still have the same amount of gold, whatever the valuation is, you don't get any more gold, because of kind of interest rates. But the prices, obviously, you can see what happened. Sorry, oh, come on. What is going on? What is going on with my template? Yeah. Like frozen all of a sudden. So if we're looking at 2023 in gold, there has been a decent growth, but not as much as, so it hasn't been, although it's been kind of good, about 14% growth. it really hasn't been any more than what we've seen in stocks and shares, where for the same period, we're looking at 25% for 2023. So it is, a good jump in the price of precious metal is expected as well. As anything that's priced on dollars, obviously, as the dollar goes down, price of something else will go up. But gold reacts very much to interest rates. So inversely, it's inversely correlated. So interest rates go down, and gold goes up, and vice versa. So this is kind of like, in general speaking, the trends in economic, general economic trends, and what we can expect for 2024. Again, we can expect interest rates to come down. We got the US election, so we can expect some form of handouts, one form or another, to make people feel happier about the situation, so that they can carry on voting for the the current ruling party and so on. But definitely for business, there are two contrasting things. Okay, although interest rates are expected to come down, remember that all the businesses that need to renegotiate their rates for loans, they're coming from previous fix at around 0 to 1%. So even interest rates, they come down from 5 to 4 to 3.5%. They're still fairly elevated at historic terms to be able to to be maintained for long-term growth and investment. Okay, so we got that cliff in a way that's being felt. That's the lagging effect of the raising interest rates. So they're not felt immediately, but it takes time to filter through in the economy. As all of you that know, they have a mortgage and they have to, maybe they come up to the end of the fixed rate deal and have to renegotiate a new mortgage. They know that it's considerably more expensive than it has been in the past. Is the same at a higher level, whether for businesses and for whole countries, is exactly the same thing. Interest rates being higher means that even the countries that borrow money through the issuing bonds, they now have to pay a much higher interest rate to keep those loans going. And businesses as well have been. So this is where the investments has been subdued, because it's more expensive. And we have seen kind of, if you look through in which countries have done better, which country have done worse, we've seen manufacturing figures get worse and worse and worse now for quite a while. What has kept the economy going across the world has been services, the growth in the service sector. And so, one of the countries, for example, the strongest in terms of services is Switzerland. And we see the kind of the Swiss franc, hitting all-time highs against a number of other currencies, for example, because, fuel from that thing. But the manufacturing figures have been quite quite poor for a while, and there has been no turnaround yet in the expectations for the future. So all is not it's not all as rosy as it seems. Although it's a good news that the interest rates are starting to come down. They started to come down for a reason, because trouble is around the corner. So be careful how you position your portfolio, because I don't think we're out of the water just yet. In terms of cryptocurrencies, now again, we've seen what's happened in 2023. So it's where we, at the end of last year, where we hit the bottom, about 15,500 for Bitcoin, and since then, it slowly started picking up. So this is when in October is when the serious talks about the Bitcoin spot ETF started pushing the market higher. But by then, it had already pretty much doubled in price from the beginning of the year. Okay, so it's just that this spot Bitcoin ETF that we've been talking about now for the past few months has, in a way, accelerated. He hasn't kind of like created this move. He just accelerated it. Okay, so they expect, and this is all. So this is kind of like a organic growth as Bitcoin starts moving towards the halving event in May of last year. But the more recent moves have been because there is a high expectation now that the spot Bitcoin ETF will be approved in there's expectation that will be approved in January. Now, it might or might not happen, but Bitcoin has moved up steadily regardless. So the approval or not approval, some people say, well, if this is not approved, it could cause a crash in the market. Well, obviously there will be a readjustment of expectations, but it will not crash the market back to where we were before, because things have shifted already. And crypto projects now are making a difference. They have real use cases that they didn't have a couple of years ago. Now, what are the expectations, in the short and long term? I mean, if you are still thinking of getting into this market and buying Bitcoins, I'm thinking for me, just looking at the charts, and the best price I could be expecting would be around here in this box. I don't expect price to come back any lower than that. So I will say, if you are lucky, you might be able to buy Bitcoin around 38,000. At the moment, we're just hovering around 44. Okay, but I'm not expecting things to retrace substantially. Because the marketing machine of the big companies, as we'll see in a second, has already started moving. Because there's going to be a war in the coming year, or who can attract most I would say cryptocurrency new blood in a way, because now the BlackRocks of this world, the Fidelity, will have something to sell, which they didn't have before. But expectations. Now, with or without a Bitcoin ETF, we will see, as I said to you before, it took several months, so from April to October, to move away from this, which was the first strong level of supply that we had in Bitcoin that went back to May of last year. Now, we went through this white space in a way. I'll just get rid of got too many lines here. We've got, this white space basically is what is considered kind of middle of nowhere. So there's no reason for price to stop for a considerable amount of time in this area. So we've gone from this blue area to this orange area, and the next one is going to be this blue area here on top. So as we can see, it's taken a while to move away from the 30 to 32,000 range. And when we did, very quickly we went from 32,000 to where we are now, 44. So the next kind of like battle arena is this one from 45 to 52. Okay, but any news related announcement like the approval on the spot Bitcoin ETF could cause a spike, because this is just whatever's happened from 28 to 44 is already a 50%, more than 50% increase just on rumors. Okay, so the actual confirmation of something happening, as opposed to just the rumor, can just push spike in interest, and people just trying to again FOMO in. All right, so that could probably push prices up, and then after the initial approval, we then have the nitty-gritty of the marketing machine starting to work, or these products be made available to the general public, and as money starts pouring into these products, then that the ETFs are passive investment vehicles, so they will need to be money that comes into the ETFs will need to be used to buy to buy Bitcoin in this case, okay, which will again cause a after the initial surge will then cause a regular growth in price because there is not that much new supply coming in, and whatever whatever the price of Bitcoin, as new funds come pouring in, will need to go up. The price will need to go up because unless there is significant whale activity, so big Bitcoin holders that start to sell, there will be a lot of price pressure on the buy side. So the last thing. So as we go back, where could we see some sort of resistance? We are getting to from here, the next thing will be then fighting against the all-time high, which are just short of 70,000. Okay, between 60 and 70,000. So this could happen actually quite, fairly quickly on the on the spur of some news announcement. Bear in mind that there's several things that can happen around this time, around May time. So we could have then this Bitcoin ETF approval. We could have interest rates that are started coming down, not just expectation, but actual cuts in the base rate in the US, and we get the Bitcoin halving event. So all these three events are a very, very fierce push for cryptocurrency prices. Just what we're talking about now with the Bitcoin ETF is kind of like more just considered as a lot more demand. Okay, the halving event means a lot less supply. So more demand, less supply. So there are two forces that pull in the same direction. So that means the miners, which get rewarded whenever a new Bitcoin block is created, every 10 minutes or so, with new Bitcoins, their reward is going to be halved. So what it means is that Bitcoin inflation is going to be halved from May going forwards. At the moment we're about like 1.5% inflation per year. That will go down to less than 1% after this event. Now, so this is what is happening right now. I just wanted to show you where's the sorry, I just oh, there we are. So this is one of the adverts. They're already being prepared. So the spot Bitcoin ETF hasn't been approved yet, but these adverts have started circulating already.
Thought you would like to know. Satoshi sends his regards. Look for Bitwise, my friends.
So that's that's the a Bitwise ad. So it's one of the applicants for Bitcoin spot ETFs, and there's a few of these ads that started circulating already. So they started advertising already in expectation of this happening. So this is another one. Again, can I play? Can I not play? No, for some reason, just the image. I can't play this one. But yeah. So obviously these things will not have an effect on people like you that have been interested in crypto for a while. But for new people, they've never been, they don't know much about cryptocurrency. Now this is going to be, pounded on them on the television, on Facebook, on all other channels. And just remember what we said last week, that Google now has removed the crypto investment ban in a way for ads. So you will start seeing from January on your feed in Google, whenever you do a search, you're gonna have adverts that promote cryptocurrency investments. Okay, so that will make a big difference for new entrants into the space. So this is going to be like, as I say, the war that would come after the approval. Okay, so just think about, do you know some of these names? BlackRock, Wisdom Tree, Galaxy, Valkyrie, ARK Invest, VanEck, Fidelity, NYDIG, Franklin, and Global X. These are just some of the firms that have filed a Bitcoin ETF request. So and if they get approved, probably all of them will be approved at the same time. Okay, so it's not just going to be one thing. So they're going to be competition to attract these kind of flow of funds, new funds into cryptocurrency. And on the other side, the SEC is is engaging with applicants on the technicality of how these ETFs will come into being. So that's been a change in shift, after the court case, from completely being against it to now thinking, okay, let's see how we can work together. So this it says on here, like sources close to various firms believe an ETF approval is likely by January the 10th. Okay, this aligns with public knowledge of a deadline linked to an application from ARK Invest. So the active engagement of the SEC with multiple applicants and updates to filings, particularly with BlackRock, contribute to the growing optimism surrounding a potential approval. So it is kind of, there are several things that point in that direction. Exactly, we can never be sure of when and if this is going to happen, but it's now it's kind of, we don't know, kind of, we're just in a way passengers in all this, but there are the players that have got their lots, the money are starting to spend it, so they don't just spend money willy-nilly. If they have, if they're doing it, it's because they know something that we don't. Okay, and I don't think all these big players would be throwing their hat into the ring if they didn't know that there was a likely good results around the corner. On things moving away from the US centered world, we can have a look at Argentina. Argentina, that has devalued their currency by 50%, by the way. They are now approved Bitcoin as a that can be included in contract. This is not just Bitcoin, but other cryptocurrencies and commodities can be included in the contracts and need to be respected. So if you say that there is going to be a contract at a certain value in Bitcoins at the end of this period, those Bitcoins need to be delivered by law. And it's interesting because apart from moving away from the for devaluing the currency, and also moving away from the idea that everybody was expecting Argentina to actually adopt the US dollar as opposed to the peso, but they are moving from in a way where are we moving in a in kind of like an economic model that doesn't include the idea of a central bank that controls the currency. So the idea of legal tender, in a way, is so the plan is actually removed here. The idea of legal tender from so with a central entity that control the exchange of value. Okay, so this could be what I've been talking about for the past few years. With the advent of cryptocurrency, I think this is one of the ways that we could go in the future, is like detaching the role of the state and the role of exchange of value. Okay, so not necessarily originally when money was created, there was nobody in control of it. One of the characteristics of money that it couldn't be influenced by one single entity. So we could go back to that sort of system where there is nobody in control of this thing that is called money, but it finds its own position just based on market forces. And that could be the biggest change in our way of living that could be considered. And this is where cryptocurrencies could come into being for ease of use and certainty, coming with the blockchain. That could be the modern asset class that replaces precious metals. They have been the kind of the go-to asset, to represent money throughout history. So we could be looking at a future where there isn't a central bank in place. There isn't a dollar or a pound that needs to be used in a certain country, and to transact. People will be able to use maybe whatever they wish to to transact. The role of the government then will be to make sure that legally contracts can be enforced, but it doesn't really matter what they are denominated in. Okay, and this is kind of the announcement that of coming from Argentina approving cryptocurrencies for contractual deals. So there will be enshrined in law the possibility to have contracts that are denominated in cryptocurrency. Other big things that we can talk about. Elon Musk, again with Twitter or X or whatever you want to call it, said they will launch payment services by 2024, and again, although it's not necessarily crypto related, but this is going to be like crypto integration as well. So we'll be seeing. Obviously, there isn't as much detail of the form that this will take, but the two things to consider is that Musk being a proponent of Dogecoin, and also Tesla holds quite a bit of Bitcoin as well, about 150 million Bitcoin in its balance sheet. So those are the with any announcement that comes with Twitter would push interest towards those coins before anything else, but it's one of the things, again, more tiles that are added to our puzzle. Now, yeah, this is the advert, but also, kind of one of the risks that might be coming from approval of the Bitcoin ETF would be actually the lack of Bitcoin being available, because there's only a certain number of Bitcoins in the market. So are there enough Bitcoins in regulated marketplaces that can be purchased to support all these new ETFs? So that be interesting to see what the result of that is in once the market adapts to to this new influx of funds into Bitcoin. Will it be the time where we stop talking pretty much about Bitcoin and pricing things in Bitcoin? We start pricing things in Satoshis, maybe, which is 100 millionth of Bitcoin. So we could be. I mean, anything. Your guess is as good as mine. The one thing we know is that there's going to be some serious issues about supply and demand. So very strong demand and very limited supply. On different things, we're talking about now Coinbase and this Brian Armstrong, which is the CEO of Coinbase, and now kind of talking against Senators Warren and Marshall that are now trying to lobbying big banks to against cryptos. So these are things that he is saying against this kind of like being a really bad political strategy in 2024. And we cites these statistics with 38% of young people saying that they can increase economic activities. Just 9% of Americans satisfied with the current financial system. Okay, and it's already there is a political movement called standwithcrypto.org. They're already close to 1 million voters that want, sensible crypto policies. Now, this is kind of like is interesting because this is the Senator Marshall that was frontman of the crypto ban bill, revealed that his bill wasn't written by him, but written by the American Bankers Association. Surprising, isn't it? So you can see where the money is, and they're trying all the things that are happening behind the scenes to try and keep hold of their power. But now we're seeing the most important thing with this is it's going to shift in the balance of power because you have now got trillions of dollars that are now interested in getting a slice of the pie of cryptocurrency. So yeah, this is the same article, and I don't know how what this really means in practical terms, because Coinbase sues the SEC for rejecting its petition. Now, this petition was for clearer cryptocurrency regulations, but so I don't know what effect it can have something like this in the courts, because the SEC doesn't have the power to create new laws. So it's not in their remit to create cryptocurrency regulation. That's down to Congress. So I don't know what I think is more of a way of getting some interest than a serious lawsuit. But we'll see. On another case, so talking about the Ripple CEO again that comes into the fray, and again he's talking about to collaborate. He's trying to rally the whole crypto industry to throw support behind pro crypto candidates. So they're not necessarily related to any particular party, but just to so in each political battle, they are inciting to support whatever candidate is more crypto friendly. So that could make a difference in 2024, because the balance in the US is very small, because there are there's a lot of states that are entrenched. They are either blue or red. So the difference is very small, and a handful of votes, a couple of million votes here and there can make a difference between one party winning or the other party winning, because can move the shift states from one side to another. So this is something that quite a few people quite a few of the the CEOs and the big figures in crypto have been talking about now for the past two or 3 years, and it would be nice if if we can see this happening during the up and coming election. So expectation for price move. Okay, so if we have to use a simple expectation here, so just sorry. Okay. So let me just draw it the other way around. Okay, so expectation kind of the, and again, we're talking, this is just playing a game, okay? So we're just guessing here. So this is no economic advice or, investment advice or anything. But you can play games with the chart. So this is the move, the latest, on the last bull market. Okay, so if you were just to use the same try and move to see where we could get to in terms of percentages, we're going from the current level to about 280,000. Okay, so we gone in the last move was from just below 4,000 to 70,000. Okay, so just applying the same sort of move to the current low could take us to around, just shy of the 300,000 mark. If we apply Fibonacci figures to it, which is this chart here on this side, an extension of the last bull cycle. So this is for me kind of the minimum expectations that I have, is the golden ratio 1.618. So that is the minimum expectation will be around 100,000, 110,000. Okay, so that's a very, very minimum expectation over the past, so over the next 12 months. With again, the expectation is what will be the inclination as well, the pace of the incline. So how quickly will price moves to, like what happened in here from March 2020 to April 2021. So it was just over 1 year before signs started appearing that not everything was okay. So we had another rally and then prices started declining. But this is the the strong move was period of just over 1 year. Okay, from when things we had a decline and then started climbing again. So at the moment, really, I mean, even just considering simply this this growth, we have not got to this situation yet. Okay, so it's not a saying that we hit the bottom down here, but we are not yet in a kind of bull market real situation, which it started in 2020 really. What was that, around maybe October? Okay, so this is the real start, I would say, of the bull market around September, October of 2020. So this is pretty much, you see, the pandemic effect. So price dropped to below 4,000, came back to 10,000. But this is where so basically you can almost like discard. You can discard this period here. So this is kind of the panic during the pandemic. Okay. So after the period after February, March, things went back to normal after August. Okay, and there was a pause, August until beginning of October, and then boom. Okay, so we are just about now getting to this point. Okay, and maybe I wouldn't go all the way down here. Where I would go to, when we started having these rumors in October. So where does that take us? That would take us to, again, 175. So we got anywhere, expectations, I would say, are between 110 and 300,000. So within that range, anything can happen depending on the excitement, the FOMO that happens in the market, and what's available elsewhere. Kind of like, is the stock market going to start pushing up very strongly as well or not? Because if it's not, then This could be, money goes wherever it can make more money. Okay, so if these start pulling very strongly compared to other asset classes, we can see a shift as well from other asset classes as well towards crypto investments too. So we have, again, this is just games, and if you want a more scientific approach, go to the ARK Invest big idea report. There should be another one coming out just about now for 2024. So just go and see how they work out the probable future value of Bitcoin, and their expectation by 2030. It's in a range between 300,000 and 1.5 million, depending on worst case scenario, middle of the range, or best case scenario. So the 300,000, which again is about 8 times where price is now, we're talking about 6 years anyway. It's not excuse me, not tomorrow. But the worst case scenario expectation is 300,000. Okay, so start thinking about it. What are my plans for the next 10 years? Do I expect my assets to multiply in value by 300% over the time frame? Sorry, not 300%. What I'm talking about. So 300,000 compared what we are now would be over 700%. Yeah, let me just calculate it where we are. Is 600%, roughly about 600% increase from now. So it's not a bad expectation. I mean, I'm not saying this is going to pass. I mean, it could be that tomorrow there's something really bad happens, really bad legislation, and crypto goes to zero. Yes, there is that chance. I'm not saying I have a crystal ball, but I can I can use probabilities, and this is what I am seeing as probable. Okay, then time will tell, and in a year's time we can all come back here and see if these expectations were right or not. At least I put my I drawn my line in the sand and I say, well, this is how I'm playing it, and then we'll see if I was right or not. But we got to try to guess to see if we're right or not. Okay, so do we have any questions? What would happen to currency rates? So the currency rate is always like relative, right? So it really is not just, ideally is based on the strength of economic growth in different countries. But yes, obviously, yes, it would be affected by change in interest rates, relative change in interest rates. So knowing where the exchange rate is going to be in the future, then you're going to have to look at some long-term charts to try and understand that. But it's difficult because we don't know what the future economic environment will be for the US dollar. So we don't know if the US dollar will be again the world trade currency in the future, or if something else is going to replace it, and that a lot depends from that long term. Do we know how many Bitcoin and Ethereum are being amassed by these big companies? No, we don't know. But the idea of the ETF, so how many are being amassed, it depends on how these companies now investing themselves into these things. An ETF is a passive investment vehicle. So simply money that comes into these ETFs has got certain rules. So there are rules in the ETF determining what happens with when money comes in and when money goes out. Okay, so generally speaking, influx of funds coming in, it's a passive investment, so they will have to go out and buy Bitcoin if there's a Bitcoin, or Ethereum in that case. If there's an Ethereum ETF, the same thing would be done for Ethereum, and it simply would be depending on amount, as much people want to put in, that will be the amount that will be converted into Bitcoin. As simple as that. So it's not. Yes, we know, for example, that what's it called? ARK Invest, for example, they do invest in Bitcoins already through the some of their investment vehicles, not directly. They don't have just a Bitcoin ETF, but they have invested in crypto and crypto projects like Coinbase and other things, for a long time. Knowing exactly how much they're investing in these, I don't know. Chad, great, thank you. We'll see you soon. If you if your signal fails, I'll talk to you later anyway. Any questions? Anybody wants to? I love the jumper, Vladimira and Jonathan as well. Well done. It's nice to see some Christmas cheer, and Uttam as well for keeping the Nepalese hat through other things, and Paul. Lovely. Well done, Paul.
It's 24 degrees here, so no jumpers for us.
Yeah. Very true. Though, you know what, we're having quite warm weather as well in the UK. So we like I think it's gonna hit 14 today, probably. So it's really warm, really warm for us. Anything above 0 is good. So if you, by the way, I recommend to go and Jonathan, as you can see, has got his Christmas set up as well. So I encourage you to go and have the Christmas version of Jonathan's Cardano session as well. And there's quite a lot of rumors about have been flying around in the news between Cardano, Messari, XRP, and all that. So I don't know if we'll be talking about that, but it'll be interesting to hear your take on that as well. Okay, so I just wanted to wish you all a really fantastic festive season. Really enjoy your Christmas. I'm going to be back doing the crypto hour during the second week of January. There's gonna be none until, so what date are you? Sorry, let me look at the calendar so I can tell you. So the next crypto hour is going to be on Friday the 12th. Okay, and I'm gonna have a couple of good weeks of rest and plan and everything else. But as I said, keep your eyes posted for this spot Bitcoin ETF approval. If you are thinking of investing, start planning your investment now, because if that happens, you're not going to get another chance of buying at these prices. So I put the best case scenario for me is to manage to buy at around 38. I doubt that we're going to see prices really go a lot below that level. Okay, so I wish you all a fantastic Christmas and New Year, and I'll catch up with you on the 12th of January. Okay.
Thanks so much, Luca. Bye.
Merry Christmas. Thank you. Bye.
Christmas.
Thanks very much, Luca.
Bye.
Happy Christmas.
Merry Christmas,
Thanks,
everyone.
Luca.